Good evening, good afternoon. How are you doing? Hope you're doing great today. My name is Martin Matthews.
And I'm Chelsea Matthews. And we are here to talk to you today about inflation. Inflation is coming. It's already started coming. And why are we going to talk to you about it? Well, we have a life insurance and financial services agency. We're in business together. We're married. We're authors of this book, Let's Fight About Money. And, our goal is to help you build an unbreakable financial house so you can handle anything that comes your way. And one of the things on people's minds right now is inflation. It's a big risk. So we're going to talk to you about how you can avoid or overcome this risk.
So look, it's we're gonna first of all, we got to start by welcoming people on. Hey, Russia Martin, hope you're doing well, and help people dispel some of the myths around this particular thing. First of all, you got to have an understanding of what is inflation, what inflation is, what it means, how does it impact you, how does it have a real life impact on you, not just by something people are talking about in the media. So why don't you go and give them the definition of inflation. We'll unpack that. How it's going to flow today is we're going to talk about the situations that's happened just over the years as it relates to this topic. And then what you can do, what you need to be as an individual, if you're a business owner, if you're head of your household, what you need to be doing and thinking about as it relates to inflation. So one quick story about this particular topic is, in the 1980s, you had inflation reach a very, very high rate, and so things started to go up in cost. And a lot of times became very unaffordable for people to pay for certain things we're doing, to pay for their lifestyle, pay for things like that. So is why understanding how this impacts your livelihood is very important to your financial success.
Yes. So we always like to define the things that we're talking about, so we have a clear understanding. We're on the same page about what the heck it is that we're talking about. So what is inflation? Well, it's when the amount of money in a country is greater than the amount of goods and services. Because of that, it's also referred to as the cost of goods and services are going up. Shit's getting more expensive. Okay? And the money is getting worth less.
Yeah. So look, you here's what's going on. And we're not this show, this live stream is not to get political or anything like that. But our government has been printing a lot of money. When you have a lot of money, you have an increase in the money supply, and you have less production because we had COVID. People weren't going out to work as much, so you had much less production. So you have increase in the money and fewer goods. It only means that eventually you'll have the price of those goods and services have to rise. So that means when you and I go out to have dinner, in fact, this happened the other week, Chelsea and I went out to go have dinner for date night, and we go to a place regularly. So we noticed the price had changed. And the lady was like, yeah, everything on the menu, the price went up. Price went up by a lot. So, and it's very noticeable, and you start to see it when people go shopping for groceries, shopping for different things. You'll start to see the impact of those. So I'm going to actually share my screen here with you so that you can actually see historically the impact of some of this stuff.
Our son even noticed it the other day. He went to the store and got a few things and was like, is the cost of things getting more expensive?
Yeah. So here's a screen share here we're going to show you. And it actually is going to show on here. Let me go down to the right place. The money supply. The money supply is here in green. Can you guys see that okay? Just give me a thumbs up or a comment if it's showing okay. The money supply is here in green. And then inflation is in the gray. So between last year and this year, inflation has gone up about 5%. So that means pretty much the cost of goods and services have gone up 5%. Well, 5% may not seem like a lot, but the Federal Reserve, their target for inflation is about 2% per year. That means your money needs to earn at least 2% just to keep up with that. Inflation had actually been higher than that. But over the last year to now, your money needed to have earned at least 5% just to keep up with the rate of inflation, with the value of how things needed to be. So I'm sorry on Instagram you guys can't see it, but we're talking about inflation. We're showing the growth on the money chart here. Over here is one of the biggest jumps in the money supply. One of the highest historical jumps is only the second highest historical jump in our money supply that we've had since I think this was tracking 1939. Since 1939, this has been the second biggest jump, biggest production, money supply. Where does the money come from? You have fewer people working. So where did the money come from? It came from your government printing more money, flooding more money into the marketplace when there's much fewer goods and services. That's where that came from. So when you're looking at that, here's how that translates to you. So as you can see, anytime this green money supply goes up, this gray one was down here, it goes up with it. Gray is the inflation, green is the money. See this next chart, every time this green part goes up, this gray part that's down here follows afterwards, right? So I see you guys can see that every time this goes up, this tends to go up, except for here. This wasn't going up so much. But anytime it starts to go up, that gray part starts to go up with it. So if you look at this last year on this chart, this green part started to go up a lot. And you can see inflation is starting to follow it. Inflation tends to follow an increase in the money supply. First, there's a lot more money. Then after that, you have inflation coming after it. So we're going to talk about the things that you can do for yourself to protect yourself, your household, your business against the impact, whether it's a big impact, whether it's a small impact. I hope it's a small impact, but whether it's a big or small impact, it's gonna happen. Prices are going to rise. So you need to prepare yourself for that. And it's better to be over prepared than under prepared. So let me stop the screen share here. And then we're going to discuss some of those things. Why don't you move on to the next part?
Yeah, so this is one of the 3 enemies of your wealth. We talk about in building our unbreakable financial house, there's 6 building blocks to your financial house. Building block number 5 is build wealth. So we talk about the 3 enemies that will affect your ability to build and keep your wealth. So the 3 enemies are taxes, inflation, and market risk. So this is one of the enemies. It's a huge risk to your ability to build and hold on to your wealth.
Yeah. So since we're focusing on inflation, that's what we'll put the topic. We'll keep our conversation to that. But those 3 enemies of your wealth can impact taxes, your biggest enemy. Now, if you look at what's happening, whenever your government is wanting to do more stuff for its citizens, well, we're going to do this for you, we're going to do that for you, we're going to do this other thing for you. The money has to come from somewhere. So the money has to come from somewhere. And the government does not produce goods and services. The government collects money. The way the government has its money to distribute to citizens is they collect money from among the citizens through taxes, and then they create their services, and then they distribute that and pay for all the services and all that. So the money comes from us. Whenever the government is offering more and more things to people, the money has to come from somewhere. There's no magic money tree that they go in and shake and then money just falls out and then they hand it to us. No, it actually comes from the citizens. So how does the government pay for stuff? Through taxes. So if the government is spending more and more money, it means you have to pay attention, not just to inflation, but also the impact of taxes on your wealth. So we'll talk about that in future live streams, inflation. And Chelsea's going to go over and start reading some of the ways to handle this. So we've talked about the history of inflation. We talked about the money supply. We talked about those kinds of things to expect and why is one of the 3 enemies of your wealth. Now we're going to talk about what are the 5 key things you need to do, or you can be doing or thinking about to handle the impact of inflation.
So yes, we're going to talk about 5 key ways to handle inflation. And number 1 key way to handle inflation is make more money. You got to make more money, man.
So look, this is only logical, right? So if your money is going to be worth less and less, or if your money is going to buy less and less stuff, you have to absolutely, the correct way, the immediate correct way to handle inflation is you got to make more money. So I mean, if you're a business owner, you have to look at your targets, right? So let's say I'm manufacturing products and the cost of my products go up. Guess what's going to happen? I'm going to either need to charge more to my clients. That's what's going to have to end up happening. Or I got to figure out how do I cut costs another way. Either way, the right way I need to handle that is to go make more money. If you're a household and you're looking at your household and you're saying, you know what, the cost of groceries are going up, the way to address that is you have to put your attention on making more money. Making more money will be one of the best things you can do to handle the impact of inflation. Looking at if you don't have a side business, how do you get a side hustle? How do you start doing things? If you're in sales, look at how you can increase your sales targets. How do you expand your sales targets? How do you look to meet more people and do more business? If you're a business owner, can you do bigger sales? Can you reach more people? All of those kinds of things are ways that you can start looking at how do you make more money. And it starts by putting attention on making more money, because making more money is going to be one of your best ways to handle the impact of inflation, because it is coming, it's going to impact you. Whether it's big or small, there's going to be some impact from it, and it's already here. Some people are starting to see different aspects of things go up in pricing.
We just talked about making more money earlier today. We talked about one of our first money fights that we got into was about spending money at a meal. And we were arguing about, I wanted to spend less, he wanted to spend more. And then we finally realized we should be fighting about how the heck do we make more money if we're fighting over how much to spend.
Yeah,
this was a long time ago, but
yeah.
It all came down to make more money.
Yeah, and I want to answer this question really quick. When somebody says, when he says the government floods the market with money, in what ways does this happen? So government has been, there are a lot of programs, government programs due to COVID, in which the government has been giving out more money. Some of the ways have been direct payments to people. Some of it has been to businesses. A lot of it has been for different relief things, because look, states needed resources to keep operating because this entire economy gets shut down. So that means people aren't going out there and buying and selling stuff, and people needed money and states needed money and things like that. So I won't get into all the details of the mechanism the government's used to, we just call it print money. But there's different mechanisms the government used to create this money. And so the money has been distributed to the states, to individuals. There was an increase in unemployment. All of that is more increase in the money supply that was created by the government, that was printed by the government, and then now distributed to people. So that's what I mean when I say that. Those are the ways that it happens. Direct payments, money to states, money for different things. And they're talking about even more, trillions of dollars more for different projects that the government wants to do.
That's a really good question, because not a lot of people know how that works. And when I know, like you said, this is not a political discussion, but when politicians promise certain programs, government programs, free things, it's not actually free because it's coming out of taxes.
Yeah.
So like Martin said, it's coming from us, the taxpayers. And that's how the money gets put into the system.
Okay. Yeah, let's say the next thing.
All right, so number 2, key way to handle inflation, gold and silver, known to maintain their value against paper currency.
So look.
Is that because they're like real money and paper currency is not? It's supposed to represent the gold and silver, which it doesn't really anymore.
Yeah, so years ago, the United States had something called a gold standard. Money was backed by gold. So you could actually have paper money, and you could go and exchange it for gold. You had this value of it in gold. Well, then we got off the gold standard, and now we don't have a gold standard anymore. The paper money is backed by the faith in the U.S. government and the U.S. government ability to tax its citizens. That's why people have faith in the U.S. dollar, because like, okay, U.S. Citizens are going to work, they're going to pay their taxes, and then the governments are going to be able to collect this money so we can continue to have faith and confidence in the U.S. dollar.
But the higher the inflation, the less the pay.
Yes, so exactly. So as more and more money is printed, the faith and belief goes down, right? So people are not like, I don't trust that dollar bill so much anymore. So to handle that or to hedge against inflation, a lot of people buy things like gold and silver. Gold and silver particularly, and there's other precious commodities, that's platinum, different things people can buy. But gold and silver holds its value because for one, it has a usefulness to it. You can use gold for many, many different things, and gold has been used for thousands of years across many, many different nations and civilizations. So it's survived the test of time. Unlike paper currency that can be worthless tomorrow, depending on a government. It's happened in lots of different places. I'm not saying that will happen in America. I'm just saying that one of the ways that people can handle that is by looking at getting some gold and silver as a hedge, as a store of your money, and it tends to perform and hold its value when inflation goes up. Because when inflation goes up, people are looking for a way to preserve the value of their money, and so they don't want their money to be worth less and less. So they convert the paper money into gold or convert the paper money to silver and that holds its value. Also, it's a way that you can trade with people because over time, gold and silver has been valuable that people always want to trade for gold and silver. So that's a key one for what you can do to handle inflation.
All right, so number 3, key way to handle inflation, real assets.
Real assets.
Real assets.
No fake asses.
No fake assets, okay?
Real
We're
assets.
talking about cash flowing assets like real estate.
So real assets, real physical assets. Real estate tends to maintain its value over time. And when you have a real estate property that produces cash flow, your tenants are paying down the debt on a property. So even if the value of the property goes up and down, your cash flow will still generally remain the same. And sometimes your cash flow can go up because you can make improvements to the property and you can charge higher rents. You can also, because when inflation goes up, all the prices of things rise. So people tend to be more accepting towards higher rents on properties if they're renting because of inflation. So real assets, real estate, something physical, these are some of the things that can be very impactful when it comes to hedging against inflation. Now, if you don't know how to go buy real estate, or you don't want to go buy real estate, a whole building or something like that, you can buy something called a REIT. It's called Real Estate Investment Trust. It's basically is similar to like a mutual fund, but it's backed by real estate. So a lot of people, and it pays dividends. So it pays dividends or it pays cash flow. So you actually get some payment. So let's say there's a REIT that focuses on shopping malls. Shopping malls are not great right now, but so there's a REIT that focuses on shopping malls. And, so the shopping malls, the stores at the shopping malls pay rent to the owner of the shopping mall every month. And so they collect money and things like that. And so if you are trying to have a real asset, but you don't want to go buy the real asset, you can buy something called a real estate investment trust. And you can use that as a hedge against inflation if you want to get access to real assets. However, like for example, for us, we're in the process of looking at assisted living real estate. So that's one of the real estate that we like, is assisted living properties. So those kinds of things will maintain its value and also produce cash flow, because assisted living properties produce very strong cash flow. Good multifamily properties in good neighborhoods where people want to live and people are moving to produce strong cash flow and allows people to continue to pay you even when the economy is bad, or even when lots of things aren't going well. People still need a place to live. So real estate and real assets are a great hedge against inflation.
Number 4 key way to handle inflation: specially designed life insurance policies used as your own bank. And let me tell you, This guy is like a genius expert at designing and explaining and creating these.
So,
Plans.
so
He doesn't create the actual policies.
yeah. So here's the thing about life insurance that a lot of people don't understand. Life insurance is kind of one of the misunderstood financial tools available to people, because people equate life insurance to somebody dying. So they don't understand how life insurance is an asset. So they misunderstand that part. However, life insurance emerged as a tax shelter in which you can put money and your money can grow and you can access it without paying taxes on it. So that sounds very different than somebody dying. So there's different categories of life insurance. There's specially designed types of life insurance where you can store money in your policy, just like you store money in a bank account. And the difference would be, one, you get life insurance. So the person passes away, there's a life insurance policy. But there is also cash. Your policy can store cash. Now, why would anybody do that? Why would I store cash in a life insurance policy? Well, for a couple of reasons. Number one, I can earn more in a life insurance policy than I would in my bank account. So if you're earning more in a life insurance policy than you would in your bank account, you can outpace inflation. You can earn more than inflation. Because if inflation is 3%, from last year to this year is 5%, but let's say historically it's 3%, your money has to earn at least 3% each year just to keep its value, just to maintain, right? It's just like you're paddling and you're trying to maintain, your money's got to earn at least 3%. If you don't earn 3%, it means you're losing value of that dollar every year. So are banks paying 3%? No. Banks are not paying 3%. Banks are barely paying 1%. So money in a savings account is losing value each year that is there because of inflation. So if inflation goes higher and your money just sits in your bank account idle and it's not growing, it's technically losing value each time. So that's one of the things that you need to understand about making this work. So one of the things we do is we store money in life insurance policies. We design our policies specifically to do that. And the goal is, hey, we want to build cash. We'll store cash in a policy. And we can leverage that money to buy assets. We talked about buying real estate. You can leverage that money to buy real estate. You can leverage that money to fund and support your business. You can leverage that money to expand your business. All of these are things you can do, especially design life insurance policies. So we use it for it like its sort of banking function. We use it like a bank. We bank through life insurance, which it's a concept that's not for everybody, but I think it's a concept everybody should have an understanding on, just because I think everybody should be aware of what are the financial tools out there, how they work, so that you can be financially literate. When you're financially literate, you can decide what are the best things for you. Because we learn about finances and different things to do, we use that. And one of the things with banking through life insurance and that concept is, I think you have a crush on Instagram, Chelsea.
Do I?
Yeah. One of the things that we used with banking through specially designed life insurance policies and using it as a hedge against inflation is that I could have my money working in my life insurance policy, and I can have cash in there earning me compound interest. And let's say I want to buy a real estate property. I can go and get a loan against that money and go take that money that I received as a loan, which is tax-free, and I can go and put that in a real estate property. That still keeps my cash in my life insurance policy still compounding. The cash has never left the policy. The cash is in there. It still continues to grow and compound. I simply leverage it. I use it as collateral for a loan, and the interest I'm earning in the policy, the goal is the interest I'm earning in my policy offsets the cost of the loan anyway. And then I take that.
Cloning your money.
Yeah, so it's like you have one asset, you leverage it, now you created two assets. I got real estate that cash flows, and then I got my life insurance policy that pays me compound interest. And if I pass away, it pays tax-free millions of dollars to my family. So this is how one of the ways we use it. This allows us to multiply our money, because we can have our money working in more than one location essentially at the same time, because we leverage it to go to buy another asset by using it as the collateral for the loan to buy another asset. So that's how one of the ways you can do that. And then some of these policies can give you a guaranteed return. And you can get dividends on top of that. There's many different ways to design these plans if your goal is to do that. But we use specially designed life insurance policies in which we store cash and we leverage it for buying income producing assets.
All right, number 5, key way to handle inflation.
Oh, before you get to that, because somebody's asking about that. So we come there. Someone says, Josh says, would you recommend the same leverage with a 401k? Yes, you can. It's not the most ideal. It's not the most ideal, Josh. And I may want to get a little bit more information from you before giving you the clear answer on it. But yes, you can do that. It can be a little risky because typically if you're working at a job, that's why they give you the 401k loan. With a life insurance policy, I don't even need to have a job. They don't ask for income checks. They don't do a credit check. They don't do any of that for a life insurance loan. Basically, I simply request a loan and they give me a loan against the policy whenever I want. However, with a life insurance, with a 401k loan, is based on you working and your ability to pay that loan back. See, if I don't pay the loan back and I die, my death benefit will pay off the loan. So I have something I'll pay off my loan anyway on a life insurance. There's no life insurance on the 401k, so it doesn't have that function in that way. So when you take a 401k loan and you either quit your job or get fired, depending on the loan you got, it can count as a distribution if you don't pay the loan back in full within 90 days. So there's a lot of stipulations on there. If that's where your assets are, then it is a strategy that you can use. You can use that if you want to buy a real asset. Sometimes there's something called what we refer to as an old 401k, where it's from a previous job. So if it's from a previous job, you can roll it over into a self-directed IRA, and then you can use your self-directed IRA to buy the property with. So that's another way that you could do it. But if it's a current 401k, then your only option may be to get a loan against it. And if you feel you could do better by going to buy that real estate, then absolutely something that you can consider. So you see that. And somebody says, how are you just going to cut it off? Your crush says, how
He
you just...
does that all the time.
Yeah. So, all right. So I hope that answers your
back.
question. Send me a DM if you have more, because I do want to find out more about the situation, and I can give you an answer that might be more specific to you.
All right. Can I go now? Can
Yes.
I talk now?
Yes, you may
He's
speak.
going to let me talk now.
You may speak,
Just
wife.
kidding. Thank you, sir. Number 5, key way to handle inflation: annuities with lifetime income and cost of living adjustments. I like the sound of lifetime income.
Yeah.
But
So
there's a lot of miscommunication, misunderstandings
So-
with this particular strategy.
yeah, annuities are basically they're mostly designed for, in my opinion, for people over 45 years old. And I see them that they work best for people who have retirement accounts. So an annuity is essentially a contract that you have with an insurance company. And an annuity means annual payments. So let's say I have $1 million in an account. I'm not going to take $1 million out at my retirement and just go blow the $1 million in 1 year. I'm going to take money out a little bit each year so that I can live on that money. So let's say I have $1 million in my retirement account and I take out $50,000 a year. If my money's not growing after 20 years, that money's gone. So $1 million taking out $50,000 a year, 20 years, the money's gone. Well, if I'm 65 and I plan to live longer than 20 years, then when I'm 85, if that's the path I'm following, then I will run out of money. So how do I make sure I don't run out of money? One of the ways you do that is with an annuity. An annuity basically says, there's different types of annuities and different features. I'm just going to give you a really general view of this. But you can go and you say, look, I got a 401k, I got an IRA, and I can put it into an annuity. And a company can guarantee that I'll get payments for the rest of my life, just like a pension plan. So a pension plan is essentially an annuity. Social Security is an annuity to give you annual payments for life. So you basically can convert all 401k as a lump sum of money. 401k doesn't guarantee anything. So you can convert the money that you plan to use for retirement, you can get guarantees on that money through using certain types of annuities. So some annuities have a feature where if you plan to use the money for income, for retirement income, they have a feature where they'll credit you a certain interest per year while you're waiting to take that money. Some of them will credit you 10% per year. So that's a way a person can have their money grow without putting the money at risk if they're getting closer and closer to retirement. And if they're worried about inflation, so some annuities that would give them, even during retirement when they're taking income, can give them a cost of living adjustment. So when you have inflation, your cost of living goes up because the cost of goods and services go up. Well, if your money doesn't go up with it, your money needs to grow up, by the way. If your money doesn't go up and your income during retirement doesn't go up to keep up with the cost of living, you feel the effects of inflation during your retirement years.
Man, you gotta get it up and keep it up.
You gotta get it up and keep it up. That's right. That's what she said. So look, that's the thing you got to keep in mind is how do you handle the impact of inflation in all these different ways. Annuities are one vehicle you can use. I don't recommend this for younger people. Younger is relative, but typically this is for somebody 45, 50 plus years old who already has money in a traditional retirement account, and they're concerned that they may run out of money. That's who I would recommend that type of vehicles for, and that's who she would be using. So we do a lot of those. We help people with them, and we help guarantee people's cash flow in retirement, because that's one of the things you want to make sure that inflation doesn't affect your retirement, so that you can continue to get ongoing cash flow from it, and no matter how long you live, you can get those checks every month without running out of money. That would be an ideal goal. That would be an ideal situation for retirement, where you get cash flow for the rest of your life without running out of money, no matter how long you live. So do you want to do a quick recap, or you want to say anything else before?
Well, I would say, okay, so I'll recap really quick the 5 key ways to handle inflation. Number 1, make more money. Number 2, gold and silver. Number 3, real assets like cash flowing real estate. Number 4, specially designed life insurance policies used as your own bank. And number 5, annuities with lifetime income and cost of living adjustments. Now, we tell you all of this, we're sharing all of this with you because we want to help you build an unbreakable financial house. And that means that you can handle anything that comes your way financially. A pandemic, a job loss, an income producer loss, life changes. Anything, you can handle it financially, but not just being able to handle things financially. You can really create the life that you want to live and the impact that you want to make in your family, your community, and beyond, as big as you can imagine. And so it's really important to understand what risks you and your financial house face and how to overcome them so that you can continue to strengthen your financial house and really make it unbreakable. So if you would like to apply for a strategy call with us, we'll help you go through the 6 areas of your financial house and help you identify any risks that you may be facing, help you identify ways that you can overcome inflation and really build that unbreakable financial house. You can apply for free. You can go to 6buildingblocks.com/strategy, 6buildingblocks.com/strategy.
And it's the number 6.
Yes, number 6. We'll put it in the comments. You can apply for a strategy call and we can go through all of your 6 areas of your financial house.
Yeah, and really quick, those 6 areas are your cash flow, debt management, reserves, proper protection, build wealth, build legacy. If you do those 6 things right, then you end up with a stronger and stronger financial house. And you can always be improving in those different areas. Your cash flow can always do better. You can always handle debt better. Get rid of more bad debt and then use debt that are building you assets. Reserves. You can always build stronger reserves in your household and your business. Proper protection. How do you have the right types of insurance? So the majority of people have life insurance only through their job. And it's one that's offered as a group plan through their job. So if they leave the job, they don't take the plan with them. So proper protection, very key. Build wealth. What are the enemies of your wealth and how do you handle that well? Build legacy. What are the tools and things you need to be able to leave assets to the next generation as part of your legacy without the government interfering with it? How do you make sure you bypass the government probate process and leave assets to your family and they can follow clear instructions that you leave, and they have to legally execute on what you say even though you're no longer here? How do you make sure you handle that for your minor children? How do you make sure your business continues to go on without you? How do you make sure your business has resources so that it can continue to flourish and prosper even in the event that you pass away? All of these things make up your financial house for your business and for your household. So like Chelsea mentioned, you can go to 6buildingblocks.com/strategy. You can do a free strategy call with us or somebody on our team, and we'll help you look at what you're doing in these 6 areas and how you can improve them, and how you can do better, how you can strengthen your financial house and be in a stronger financial position. Right. So anything else?
You said it all.
Okay. So I reiterated it because maybe people missed some parts, maybe people just hopped on. So I said,
He thinks it sounds better coming from his mouth.
Well, I just reiterated it because I want people to understand the value of knowing about your financial house and how to strengthen it, especially when you have some uncertainties about inflation, uncertainties in the economy, and uncertainties about interest rates. What interest rates are going to look like as we go forward, because even the Federal Reserve says they're going to raise interest rates. We just don't know how high and how fast they're going to raise interest rates, but they're going to need to, because inflation is going up. So that's one of the mechanisms to have to try to control or handle inflation. But also, people do need to make more money, like we were saying. So that's key. Hey, Deb McIntyre. Hey, David. Thanks for joining us. Thanks for watching. So go to 6buildingblocks.com/strategy, and we look forward to talking to you guys soon. See you next time.